Hello and welcome. Please like, share, and subscribe. If you like the review, it really helps if you buy the books using the links in the description down below, either in book or audiobook form. Thank you very, very much for joining. I hope you enjoy The Intelligent Investor by Benjamin Graham. Chosen quotes.
You've got to be careful if you don't know where you're going, cause you might not get there. Yogi Berra. It requires a great deal of boldness and a great deal of caution to make a great fortune, and when you have got it, it requires 10 times as much wit to keep it. Nathan Mayer Rothschild. The investment world nevertheless has enough liars, cheaters, and thieves to keep Satan's check-in clerks frantically busy for decades to come. The best way to measure your investing success is not by whether you're beating the market, but by whether you've put in place a financial plan and a behavioral discipline that are likely to get you where you want to go in the end. What matters isn't crossing the finish line before anybody else, but just making sure that you do cross it.
The author. Benjamin Graham was an American economist, investment advisor, and author. He is considered the father of value investing and is widely recognized as one of the most influential figures in the field of finance. Graham was born in 1894 and earned a degree in economics from Columbia University in 1914. After graduation, he worked on Wall Street as a stockbroker and investment advisor, eventually forming his own investment management firm. In the 1920s and 1930s, Graham developed a philosophy of investing that emphasized the importance of buying undervalued stocks and holding on to them for the long term. He argued that investors should focus on a company's intrinsic value rather than its stock price, and that by buying undervalued stocks, investors could achieve higher returns with less risk. This approach to investing, known as value investing, has become widely recognized as one of the most effective and efficient ways to invest in the stock market. In 1949, Graham published his seminal work, The Intelligent Investor, which is widely considered one of the most important books ever written on investing. The book laid out his philosophy of value investing and provided a comprehensive guide to security analysis and portfolio management. The book is still widely read and studied today and is considered an essential read for anyone interested in investing. Throughout his career, Graham continued to write and teach about investing, and his ideas have had a profound impact on the field of finance. He passed away in 1976, but his legacy lives on through the many investors and financial professionals who have been influenced by his work. The book. The Intelligent Investor is a comprehensive guide to investing written by Benjamin Graham, a renowned economist and investment advisor. First published in 1949, the book is considered a classic text on value investing and has been widely read and studied by investors and professionals in the financial industry. The book is divided into 3 parts, each of which addresses a different aspect of investing. In the first part, General Principles, Graham lays out his philosophy of investing, which emphasizes the importance of being a value investor rather than a speculator. He explains that value investors focus on the intrinsic value of a company, whereas speculators focus on short-term movements in the stock market. Graham argues that value investing is a more effective and less risky approach to investing. In this first part, Graham also discusses the importance of proper diversification and risk management. He explains that investors should spread their investments across a variety of different companies, industries, and asset classes in order to minimize the risk of losing all their money if one investment goes bad. He also discusses the importance of maintaining a long-term perspective and avoiding the temptation to chase short-term gains. In the second part, The Investor and Market Fluctuations, Graham addresses the volatility of the stock market and how investors can protect themselves from it. He explains that stock prices are influenced by many factors, including economic conditions, company performance, and investor sentiment, and that these factors can change rapidly and unpredictably. Graham argues that investors should not try to time the market, but instead should focus on buying good companies at fair prices and holding on to them for the long term. He also stresses the importance of having a well-diversified portfolio that can weather short-term market downturns. The final part of the book, Security Analysis, delves into the specifics of security analysis, including how to value a company, how to identify undervalued stocks, and how to avoid common mistakes. Graham explains the various financial metrics that investors can use to evaluate a company, such as earnings, cash flow, and debt levels. He also provides guidance on how to read and analyze financial statements and how to identify red flags that may indicate a company is overvalued or in financial trouble. Overall, The Intelligent Investor is known for its practical, common-sense approach to investing. It is a comprehensive guide that provides a thorough understanding of the principles and practices of value investing. The book is still widely read and studied today and is considered an essential read for anyone interested in investing in the stock market. It provides a solid foundation for anyone looking to build a long-term investment strategy and to make informed decisions in the stock market. What is it really about? This is a book about the importance of value investing, which is a strategy of buying good undervalued stocks and holding onto them for the long term. Score. Is it easy to read? It deserves a score of 3 out of 5 in terms of ease of reading. The book is written in a clear and straightforward style, but it does cover complex financial concepts and can be quite dense in parts. It is not a light read and requires focus and attention to understand the concepts presented. It's a book that is intended for investors and those interested in finance, so it's not a casual reading material, but it is not overly technical or hard to understand for someone who is familiar with finance and investing. Is it fun to read? I would give a score of 2 out of 5 in terms of being fun to read. The book is not written to be entertaining, it is rather a guidebook, and it is quite informative and educational. It covers complex financial concepts, and it is not a light read. But it is also not dry and boring. It can be interesting for someone who is interested in finance and investing, and it is packed with valuable insights and practical advice that can be applied to real-world investing scenarios. The book is not something that will keep you on the edge of your seat, but it will provide the reader with a solid understanding of value investing and the principles of security analysis. Is it relevant? It is a 5 out of 5 in terms of relevance. The book was first published in 1949, but the principles and strategies outlined in it are still widely used and considered valid today. The concepts of value investing and security analysis that the book presents are fundamental to the field of investing and finance and continue to be relevant for investors of all levels of experience. Additionally, the book provides a solid foundation for anyone looking to build a long-term investment strategy and make informed decisions in the stock market, making it a relevant read for anyone interested in investing. Do I recommend it? It is recommended for individual investors, financial professionals, and students studying finance or economics. It can also be useful for anyone who wants to learn more about investing and finance and wants to develop a long-term investment strategy. Thank you again for joining. Don't forget to like, share, and subscribe. I look forward to seeing you again.